Now, it's a busy start to the week in China. The Fourth Plenum meetings run from Monday to Wednesday, with the primary focus expected to be the discussion of China's 15th five-year plan. Now, the plenum will cover the key development plans for China between 2026 and 2030. While the full five-year plan likely won't be available until next year's two sessions, some information on the key themes discussed will be released this week. Of particular interest are priorities for development, including how to expand consumption, foster innovation, and the strategic focuses going forward. Now, in the past, Fourth Plenums have deliberated on party governance, including personnel reshuffling and disciplinary actions. Last week, the Chinese party expelled top 9 military generals after a graft probe that suggests Premier Xi Jinping is looking at a clean roadmap even before the plenum discussions. And a key face-to-face meeting with U.S. President Donald Trump. Now, usually the elite Central Committee of China's ruling party discussions broadly cover economic growth, industrial modernization, technological innovation, environmental protection, national security, and social goals. Now, markets will see if China's plenum will discuss other topics such as tariffs and trade barriers, especially on tech. Now, China's plenum also come amid the back and forth of threats and posturing with the U.S., while five-year plans don't change on short-term fluctuations in diplomatic and trade relationships. Now, the trade war with the U.S. is likely to keep policymakers focused on industrial upgrading and technological breakthroughs. That suggests resources would keep flowing towards factories and strategic investments rather than consumers. So deflationary forces are likely to persist. Now, the five-year plan comes as China reported a slowdown in GDP growth in the September quarter. China's economy slowed for a second straight quarter to grow at the weakest pace in a year. Gross domestic product expanded 4.8% from a year earlier, down from 5.2% in the June quarter. Retail sales grew just 3% to mark the slowest expansion since November. Fixed asset investment fell 0.5% in the first 9 months of the year, reflecting the first contraction since the pandemic in 2020. However, the broad slowdown was buffered by surprising strength in industrial output, which expanded 6.5%. And on the other hand, September property price data reflected a negative trajectory as seen in recent months. Now, with no fresh stimulus, economists see little reason for a significant turnaround that suggests that there will be no respite from China's real estate recession anytime soon.